270th Monetary Policy Committee meeting in progress in Abuja. SEC removes deadline for multiple account regularization. Nigeria sets to host Global Extractive Industry Transparency Initiative's chief. Asian markets gain amid fresh hopes for US-China trade deal. Details of this and more on Business Express, reaching you from Abuja, the nation's capital. And I am Benny Adams, your guide. The Securities and Exchange Commission has suspended the regularization deadline for stakeholders that open accounts to buy shares with different names. This was part of the outcome of the third Capital Market Committee meeting held in Lagos at the weekend. A statement by SEC's Head of Corporate Communications, Efe Bello, says the Commission's Acting Director General, Mary Oduk, explained that the suspension would enable other stakeholders that are having challenges with their details to regularize their holdings. The Commission had set December 31st, 2019 as the deadline, but suspended the date to enable affected stakeholders have sufficient time to harmonize their accounts. Extractive industry. Nigeria is set to host the head of International Secretariat of the Extractive Industries Transparency Initiative based in Oslo, Norway, Mark Robinson. He is expected to arrive in Nigeria on a working visit this Monday. Mr. Mark is visiting Nigeria to assess the level and impact of AT implementation in the country. The visit is also designed to review progress made so far by Nigeria in the implementation of AT standards as part of the overall ongoing reforms agenda in Nigeria's oil, gas, and mining sectors. Crude oil traders are betting the market will tighten significantly next year, even as the major statistical agencies predict production will outstrip consumption and oil inventories will rise. Most of the divergence can be explained by differing assumptions about global growth in 2020. The International Energy Agency, the U.S. Energy Information Administration, and the Organization of the Petroleum Exporting Countries are all projecting that the oil market will be in surplus in 2020. Each of these three agencies is forecasting that non-OPEC oil supplies will increase around 1 million barrels per day, faster than global oil consumption next year. The three agencies are also forecasting non-oil OPEC production growth of 2.2 to 2.4 million barrels per day, while consumption increases by only 1.1 to 1.4 million barrels per day. The European Union and Oxfam are funding a social investment project in northern Nigeria targeted at improving food security. Musa Baba Aliu was at some of the benefiting communities of the EU project to ascertain the impact.
This group of farmers are beneficiaries of EU Oxfam Agriculture Extension Program. They harvest more than 10 bags of 70 kilograms of maize against the 4 to 5 bags they get annually.
They are not doing spacing, and they don't maybe apply fertilizer 2 times in a plot.
Hali Aliyu is a sorghum farmer in Wasagu. He was supported with fertilizer and extension service to expand his farm.
For the last 3 years, I'm harvesting this for not up north to 12 sacks or 10. But now, for last year, I harvest more than 20.
The women in Jega, Birnin Kabi and Wasagu were grouped into associations, which they were trained in financial literacy, nutritional program and marketing. 70-year-old Saida Todemu is a member of one of the associations in Wasagu. A widow with no child or grandchild says the EU project has been a great helping hand. I saved 13,000 naira last year, and this year I'm hoping to start rearing goats, she says.
Data by the National Bureau of Statistics Friday morning shows that Nigeria's gross domestic product grew by 2.28% in the third quarter of 2019. This figure is 0.17 percentage points higher than the 2.12% revised GDP growth recorded in the second quarter. The previous quarter 2 GDP figure released was 1.94%. The report also shows that the average daily oil production in the quarter stood at 2.04 million barrels per day, its highest in more than 3 years. Despite an increase in crude oil production, the real GDP growth of the oil sector was 6.49% year-on-year. This is 0.68 percentage points lower than the 7.17% recorded in the second quarter. The non-oil sector also grew by 1.85% in real terms during the reference quarter. You are watching Business Express on the network service of the NTA. We'll take a short break, and when we return, we'll beam our searchlight on the recently released data on Nigeria's GDP figures. With the recently released figures by the NBS still fresh on our minds, what are the implications of these numbers as it relates to the Nigerian economy as the year 2019 winds up? We have Dr. Aminu Usman, Faculty of Social Sciences, Kaduna State University, to do that. Glad to have you, sir.
Thank you.
Well, what do you make of the new GDP figures growing by 2.28% compared to the 1.94% previously recorded, coming at the time that oil prices are actually high?
Well, I think it's relatively good news. At least the economy is growing, even though very, very sluggish. But the thing is that this growth is being achieved not out of policy, but out of vagaries of the international oil market. That's why you also reported that oil prices have been rising, because that's what actually brought about the growth. But I think part of it is also the stability in the Niger Delta area, so that it gives the country the opportunity to explore more oil and then export more oil to sell, and things like that. Now, it's a good thing, at least the economy is somehow growing. But the problem is always with the Nigerian economy, the growth has always been on a sector that contributes very little to the GDP. If you look at it, the sector despite the relative loss on the oil sector, it still contributed probably about 9.7 or 9.8%, which the non-oil sector substantially is a driver of the GDP, and it's still not really performing very excellently.
Okay, talking about the driver of the GDP, that's the non-oil sector, we have a growth rate of 1.85. Yes, it's not as much as the oil sector. What can we do to step up that?
Well, a lot needs to be done, but if you look at it, I believe the oil sector could have grown a lot better, even though because of the border closure. So the border closure also has an impact, negative impact, of course, on the economy, like it has on the probably West African economy generally, because if you take the breakdown, you find that trade and related sectors have actually witnessed negative growth, simply because the access of entry for imported goods has actually been blocked somehow. And if you look at also the performance of banking sector, it has also gone down. You know, the banking sector has always been the one driving most growth in the non-oil sector, but this time around it came down. I think it is overtaken by information and communication technology, simply because the effect of the border closure has also affected their capacity to finance trade, because most of the trade they finance, actually the import comes through the land borders. So once the importers can no longer import, or what they have imported they can no longer bring in, sell and pay off their debts, then it means there will be some little bit of sluggish movement in the banking sector, which also affected some other sectors.
Okay, talking about the banking sector, that has been another key sector that has also helped the growth in the GDP, but we seem to see a sluggish movement. Is there anything you can attribute to that?
Exactly. I mean, you see the economy, like I said, is only growing. Substantial growth comes from the oil sector.
Yeah.
And even the growth in the oil sector is driven by only two things. Maybe a little stability in the Niger Delta that allowed for more stability in actual exploration activities, and then also the improved prices in the international world oil market. Now, but the other sectors of the economy, due to some other reasons, of course, and of course the Minister for Finance have been complaining that they have what she call revenue crisis. What I would rather say is actually it's a debt crisis. It's not like revenue, because you borrow because you don't, I mean, you build, you pay a lot for the borrowings you do. So actually it's a debt crisis which affected revenue significantly. And then once the economy is slowing, then the banking sector will be the first one, because government is actually crowding out in a way, because it borrows heavily from the banking sector. So the private sector actually not having access to funds to actually grow the economy. So activities in the private sector is actually constrained by lack of funding, well, because government actually needed money to continue to run the government.
Well, one sector that contributed largely in the non-oil sector, talking about the growth of the GDP, is talking about ICT. Are we getting it right?
Well, I think the ICT sector is actually doing fairly well. Looking at the growth in the sector, looking at the activities, ICT has really come to stay, and it has already given a hope that is going to be contributing significantly, especially if you look at what a few weeks ago the Minister for Information and Communication said, look, he wants the name to be changed to Minister of Information, Communication and Digital Economy, because the whole economy is now being driven digitally. So once there's this mindset from the government that, look, we are not going to digitize the community, take this economy to digital age, to digital stage, then it means the ICT will see ICT actually playing a needed role as time goes on in actually driving the economic activities in the country.
Okay, talking about economic activities and the ICT, talking about information technology, the world is driven that way in agriculture, in our financial transactions, in all of that. Yeah. From what we are doing and from the impact we are seeing, what else can we do to step it up a bit?
Well, I think the ministry will have to be up and doing and actually try to raise the country's level to actually achieve a lot more. Because of course we can't get there, because you know the way development is before we actually reach one certain stage of development, the developed world have already met. But then we need to fast track the system, actually catch up. We need to actually look at our education sector so that we can be able to actually digitize and make people more digitally relevant to the, because part of the problem is that we have so many people that are still analog in their perception, they are doing things and doing things. So, but trying to upgrade virtually every sector of the economy to actually be digitally driven will actually help a lot. And I think the mindset of the current minister is helping towards that direction.
And a very important meeting is ongoing in Abuja, talking about monetary policy committee meeting. And with this news of the good news about the GDP, are they on some tight spots? What are the expectations? What do you expect to come out of this meeting at the end of the day?
I think, you see, the monetary policy committee are more concerned about the financial aspect of the government and then the economy generally, how they're going to ensure that yes, there's enough money in circulation, but that money does not fuel inflation. So how do they take policies that will actually help production, improve consumption, so that it can be able to stabilize inflation? So I don't expect them to hurriedly actually lift the limit on interest rate yet. Probably they will still maintain it for the time being, just to watch what happens at the end of the fourth quarter, then probably before they now start thinking of actually expanding the band or shrinking the band. But I think one good thing about the monetary policy is that it is a system. The Nigerian financial system, the Nigerian entire system has started responding to communication from the MPC. Everybody is now waiting for what happens at the end of today. So a lot of business decision will wait for that, because that will have impact, impact or implication for whatever decisions they will take at the end of the day. So I think it's right time, and there's expectation for me really is that they are not going to change the parameters they've been working on for the time being. Okay, the growth of the economy is not that very encouraging for them to actually tinker with the people.
I get it. Okay, still talking about the financial institutions. There are some experts are of the view that the quick passage of the 2020 budget would improve lending, particularly in the private sector. And the CBN has also directed banks to do same. What's your opinion on this?
You see, yes, timing is also very important.
Okay.
But I don't think much should be expected just simply because the budget is early passage. Because the president himself, when he is presenting the budget, he said the current budget of 2019 will extend up to the end of June. Implementation will go up to the end of June. So the fact that 2020 is approved now does not mean that its implementation will start in January again. But the good thing about it is that this give the business sector that going forward, as from next year probably, we'll be able to see that timing now becomes very important. That the budget will be ready, it's just the implementation. But I think the most important thing about the budget is actually the implementation aspect. I think the government should actually find a way of getting itself out of the cash trap it is, because it has serious cash gap that makes it mandatory for them to keep borrowing from the private sector. And then by borrowing from the private sector, actually crowding out the private sector to be able to actually expand and invest and expand the economy. But the government is borrowing to actually maintain the government's activity substantially.
Dr. Aminu Usman, yes. You agree with me that we are getting it right now with the budget calendar as it is. The year is also rounding up. Briefly, what do you expect?
Well, I'm not saying, I think it's good, yeah, we are getting it right with the calendar, but I think what I'm going to say is that 2019 has all been very good for this country. It has all been very good for most businesses. There are so many pitfalls. I think the government should focus itself in actually trying to see the impact of its policies on the private sector, on the economy generally. Because when you keep implementing policies and you don't see the kind of growth, because up to now our growth is still saying that our population grows faster than our economy is growing.
We are also still making progress.
Yeah, of course we are making progress. I appreciate the fact that we are making progress. Yes, definitely we are making progress, yes.
Thank you very much, Dr. Aminu. We've been talking with Dr. Aminu from Kaduna State University. It's been a pleasure having you.
Thank you very much.
Love to have you again some other time.
Thank you.
Well, moving on to the stock exchange. The NSE All-Share Index and market capitalization advanced 0.16% to close at 27,035.78 basis points. Investors traded 230.6 million shares valued at 3.2 billion naira in 4,254 deals. Zenith Bank, GT Bank, led market activity in terms of volume of trade, with Zenith Bank recording 42.3 million traded shares. Top gainers for the day were Nestle, Presco, and Dangote Sugar, while Okomu Oil, FBNH, and WAPCO led the losers table. Now, the Asian shares were mostly higher Monday amid some optimism that the US and China may be closer to a trade deal. Bosede Ebel has details of the global market report.
Market focus is largely attuned to global trade development as investors continue to closely monitor a long-running dispute between the world's two largest economies. On Saturday, U.S. National Secretary Advisor Robert O'Brien said a so-called Phase 1 trade deal with China could happen before the end of the year. However, he also cautioned President Donald Trump would not ignore ongoing protests in Hong Kong. The US and China have imposed tariffs of billions of dollars worth of one another's goods since the start of 2018, battering financial markets and soaring business and consumer sentiment. Shares in Asia were higher on Monday as investors reacted to Hong Kong's district council elections amid months of civil unrest in the city. Hang Seng Index led gains among major markets regionally as it jumped 1.5% to close at 26,993.04. Shanghai Composite rose 0.72% to around 2,906.17, and also Nikkei rose 0.78% to close at 23,292.81. European market traded higher, with investors hopeful of progress in the US-China trade dispute, while in Africa, stocks were mixed, with South Africa's JSE Africa Top 40 and Namibia's overall index posting gains.
That brings us to the end of this edition of Business Express. You can access all previous episodes on YouTube, and you can also communicate with us on Twitter, and the handle is @NTA News Now. The hashtag is #BizX. We value your feedback, so keep the mails coming and join us for another episode of the program. I am Benny Adams. Like we always say, keep thinking and doing business.